Good afternoon and welcome to the Market Closing Show, our brand new collab show between Business Today and India Today Television. It's 3 p.m. and we are here to get you all the market closing action. Let's first take a look at what's hot in the world of corporate as well as financial space. Stock markets extend a 4-day losing streak. Sensex slips over 300 points, near 81,800 now. The Nifty is also down by 70-odd points at 25,100. Broad-based selling has dragged financials, IT stocks and even real estate stocks lower. Energy and consumer durables are also under pressure. Public sector banks are on a roll, bucking the downtrend. We are actually looking at the PSU banking stocks. The index itself hitting a one-year high as SBI, Canara Bank, Indian Bank, all of them have scaled to 52-week highs. Private banks, however, trade in the red. Government may actually raise the FDI limit from 20% in public sector banks while retaining their own 51% stake. A big boost is expected for the shipping sector. Sources have told Business Today Television that Union Cabinet is set to approve 65,000 to 70,000 crore rupees schemes today, including the Shipbuilding Financial Assistance, Maritime Development Fund and Shipbuilding Development Schemes. Shipping Corporation of India leads with 2% gains. Tata investment share has risen by 10% in trade today as Tata Capital IPO is set to open from October 6 to October 8. Now remember, shares also have been surging since yesterday. A 12% of an uptick was seen on 1:10 stock split, hitting 52-week highs. Walmart-backed PhonePe has filed draft papers with the SEBI, that's the market regulator, for 12,000 crore rupee IPO via confidential route. The digital payments giant now plans for a pure offer for sale of an issue as per sources. Let's straight away take it from the top as far as the markets are concerned. In the last half an hour of trade, viewers, we are still hovering about 0.4% lower in trade, now at 25,064 odd levels as far as the Nifty is concerned. All the sectors barring FMCG now are into the red. Even PSU banks have now slipped after having and holding up into the gains throughout the course of the day. You can actually see it's the real estate sector that's dragged about 2.5% lower. It's the top loser in terms of sectoral action today. Autos follows next. You can see a sharp profit booking that's taken place in the auto segment, 1% lower for the index as well from many days up until the rollout, and even beyond that we've been seeing auto segment continuing to be on the driver's seat, and now you can see some profits being taken off. Broader markets have also slipped in trade today, 0.8% lower for the mid-cap index. You can also see a lot of private banks, financial services stocks also lower in trade. Consumer durables and pharma have also pulled lower. Top movers, however, which are bucking the trend on the Nifty are Power Grid, NTPC from the Power Pack, even the metal names like JSW Steel. You can also see Hindustan Unilever from the FMCG pack and HCL Technologies from the IT pack. So mixed trends there, select stocks from various sectors that are making a part of the top 5 names on the Nifty. On the lower end, you have Tata Motors that's dragged by about 2.6% today. Adani Enterprises after 3 to 4 sessions of a move. The Adani stocks are also looking at profit booking. You can see BEL, IndusInd Bank, Wipro and Hero MotoCorp as among other stocks that are still dragging in trade. Anything specifically in the F&O space that I must mark out for you? Keynes Technologies, which is in the electronics manufacturing and services space, that's up and about in trade, now a leader there. Domino's maker Jubilant Foodworks is also pulling up higher. You can also see SBI Cards as among those F&O movers that are pulling up in trade. What's happening in the broadest index, the Nifty 500 names? Well, there are names like Bajaj Healthcare, Munjal Auto, Paradeep Phosphates, Good Luck India, all of those names that are pulling up in trade, and many of those auto ancillary names definitely making up the move right now. But let's go across to our guest now, Mr. Chakri Lokpriya, the CIO of Equities at LGT Wealth, who's now joining in to share with us his views on the markets. Warm welcome, good afternoon to you, Chakri, and thank you so much for taking the time out. But I want to first begin by understanding from you, how are you looking at this extreme amount of volatility that's taking place in the markets, the resistance that markets continue to face at 25,500? That's despite all the good news that the markets are already penciling in. We have the GST reforms that are lifting in the consumption spirit as well as the festive demand that's in the air. How are you looking at the markets not being able to pull up further from there?
Good afternoon, and thanks for having me. And I guess if you look at the market, we have had the GST, and after that, which was the good news, the automobile as well as the consumer discretionary companies, actually, the stocks ran up in price fairly significantly over the last 10 days or so. And then we've had another kind of a negative news of an H-1B fee on visa fee on workers from India and other countries working in the US. That kind of brings about another uncertainty about what is the amount of foreign exchange trade that India can do because of this. Will it impact the businesses? I guess the net sum of this uncertainty is kind of you're seeing some amount of profit booking, but that's about it. Nothing more to really significantly worry about.
Okay, so Chakri, what do you pencil in on in terms of a recovery from here and probably an attempt by the markets to really go back to the erstwhile highs of above 26,277 and even move beyond it? So far this year, it's been a lackluster year for the Indian equities at large, just about 3-4% of a move on the higher side. What is it that you believe will really pull the markets from this consolidative band that we've been seeing markets trade in?
This whole year we've lost in lots of global uncertain events, whether it was the various 3 or 4 wars, and after that the Trump tariff uncertainty, and again the continued now the new visa uncertainty. So I guess all this has taken a kind of a toll on corporate India earnings, which has come down. Now they're growing at probably about 6-8%. That has led FIIs to sell, and so once there's some amount of clarity that emerges between the India-US tariff, I think that's when we will see a resumption of growth, and that's when FIs also would come in.
Absolutely. That's a key question as to when will FIIs come in, and those are the key factors that you definitely believe that will be able to pull back that foreign money into the Indian markets. But in terms of the key sectors that you are bullish on right now, Chakri, are you looking at the domestic themes, the consumption-focused themes at this point in time? Do you still believe, we've already had a run-up from the announcement of the GST rollout that happened on 15th of August up until now? A lot of sectors have already shown a lot of enthusiasm. Autos, consumer durables, FMCG, even retail, maybe footwear. All of these stocks have actually reflected that before the news also came in and before the rollout started. Do you still believe there is a lot of upside there, or are you looking at completely some other sectors at this point?
I think clearly now the focus is domestic focused because there is a good amount of uncertainty because of global factors like tariff. So against that backdrop, with the GST rates cuts, consumer discretionary automobiles of various kinds will continue to do well. And second, the government has clarified that indeed capital expenditures budgets will not be cut, and in fact, they'll probably go up a little bit. So that will provide a lot of fillip to the various capital goods industrial space, which is again very domestic focused. And the third is power, which is a very important area, utilities. So these areas, I think will continue to see a growth acceleration and the domestic in nature, and that's what we'll be focused about.
Absolutely. One more sector that I will ask you to keep an eye out on, Chakri, is the banking space. And before I come to you, there's an important news update that all our viewers must know with respect to the public sector banks, those banks that are owned by the state, by the government. The government of India is working on reshaping the identity of public sector banks with a focus on boosting global competitiveness and strengthening governance as well. And to make this transition possible, the government is also in preliminary discussions to raise the cap on the foreign portfolio investment in public sector banks from the current 20% to a significantly higher level. And that's what sources have told Business Today Television. My colleague Karishma Sudani is now standing by to help us understand what is it that's on the agenda. We've also been seeing, Karishma, since morning, PSU banks have actually been displaying a lot of strength and only now have seen some profits being taken off. What is it that you're getting to here? What is the kind of stake that FPIs can look to hold in PSBs, and what is the thought behind it?
Actually, you were just discussing on the show as we began of the fact that how this year has underwent a lot of geopolitical changes and global movements that have taken a major hit. But I think the silver lining out of this is that India and the Indian government is thinking of various policy reforms in order to up its game. And one of them is to have more and more foreign investment in India, and there has been a long-standing demand that the cap limit of foreign investors in public sector banks has been limited to just 20%, and that kind of concises and compacts their expansion plan on a global platform, and it has been a big challenge with the existing capital. Well, government is currently in early discussions on this, if they could increase this, while we do not know the cap that they will probably increase it to, but it is definitely certain that government will not reduce its 51% holding.
Correct.
Currently, from 20%, they could look at the cap to be increased somewhere between, say, 40 to 45%. Now, that coming in is going to be big news, because it will bring Indian banks, especially the ones who are on the top, as a part of the global financial markets, recognized as global banks. And that has been something that India has been wanting to do for long. Look at
Absolutely.
holding in, say, SBI or Canara Bank, they hold about 10 to 11%. But with this cap being relaxed, it could go further high.
Absolutely. Thanks a lot, Karishma, for all of that update. We'll keep an eye out on when the confirmation really comes in on our news flow as well there. Chakri, coming back to you, we already have brokerage firms like Nuvama already penciling in a $1 billion kind of passive inflow that could actually come in on the public sector banks in case the holding is increased from the current 20%. Now, we do know from long time the government has been focused on strengthening the position of the public sector banks. Do you think this is the right way of approaching at this point in time, increasing of the foreign investments there? Will it provide the much needed strength into these banks?
You know, financial institutions have been the backbone of a nation. And, you know, public sector banks have played an exceedingly important role, especially in the last few years, where most of the heavy lifting in terms of the funding of capital expenditures was done by the PSU banks. And rightfully so. And so now for them, in order to attract more global capital, companies, very large banks like State Bank of India, State Bank, Union Bank of India, all these companies, excellently run companies, their limits when a foreigner needs to buy in, then there is, once it hits the 20% or each individual bank is the limit, they cannot buy more. So by relaxing that limit, while the government will still be the majority shareholder, it would allow more foreign investment. So when a company needs to do a secondary raising, it would enhance. And I think that the banks are extremely well placed. And if this actually is enacted, it will be a very good step in further improving and strengthening the Indian banking system.
So any key favorites there, Chakri, that you could mark out? And for those who were big on the private sector banks thus far in this year, because they have been, the front winners as far as the market's recovery is concerned, should they switch their positions from private banks to PSU banks now?
You know, private banks clearly have a role to play, but public sector banks play a very important role in the case of nation building. So whenever there's an infrastructure project, there's a road project, there is a capital expenditure requirement for an industry, that usually comes from a public sector bank, and that's where the growth is likely to come from. And therefore, you know, State Bank of India, Canara Bank are excellent names.
Okay, there's a breaking news that's now coming in, and we're going to dip into that as well, viewers. It's a big boost for shipping sector that we now expect, as Cabinet has approved 69,725 crore rupees schemes, plans including shipbuilding, maritime development, and that's what we are given to understand. Let's quickly look at what's happening on the shipping stocks at this point in time. Shipping Corporation of India is hovering about 4% higher. Let's also pull up names like Garden Reach Shipbuilders, Cochin Shipyard, and Mazagon Dock as well. All of those will be in clear focus. Remember, from the last couple of sessions, these stocks have actually been in big focus as well. And now finally, we have a cabinet approval coming in, a big booster shot for the shipping sector, with the cabinet approving 69,725 crore rupees of schemes that will include shipbuilding and maritime development on that front as well. 1% higher for GRSE at this point in time. It's hovering around 2,710 odd levels. Let's also look at Cochin and Mazagon Dock, and we can also look at Shipping Corporation of India also pulling up in trade with huge volumes now coming in there. Chakri, coming back to you, how are you looking at this announcement from the cabinet and approval coming in, and what does it mean for the shipbuilding sector at large?
This is a very significant move, and if you look at shipping as an industry, has been largely concentrated by very few countries, and the shipping routes are concentrated again. So, shipmaking and the expansion of this both shipbuilding as well as freight routes will play a very significant role. I think Shipping Corporation of India, Mazagon, Garden Reach, all these companies need that kind of capital to foray on because these are long-dated investments. Great move.
Okay, great move there. Any top choice of stocks there? Would you be comfortable at these valuations? In the last run-up in the defense space, these stocks had moved up very swiftly and, had reached to a point where valuations were being questioned. How are you seeing the valuation part in these defense names, especially in the shipbuilding space?
Valuation is a function of growth. With the new announcement that provides a further impetus to growth, the growth will go up. And therefore, I think one can even buy at current levels.
One can even buy at the current levels. All right. Well, apart from this, Chakri, I also wanted to focus on any key sector that you are still staying very cautious about, and staying away from right now. What sector would that be?
With all the noise on the information technology about the visa fees and still the tariff, which has created a general uncertainty, I think their business will kind of slow down. So I think it's best to wait for the dust to settle and stay away from the IT sector until then.
Okay, got that. So IT sector, stay away from that until and unless there is some clarity on that account as well. There's also one report, again, focusing on the consumer durable space, specifically in the air-conditioned space. There's a rating agency called ICRA that has forecast a 10 to 15% year-on-year decline in the Indian room air conditioners industry. The volumes they're expecting is about 11 to 11.5 million units in FY26, and that's a drop from a record million units that we had seen in FY25 of 12.5 to 13 million units as well. Now, this is following the demand constraint that has been caused by an extended period of unseasonal rainfalls. And what we've also seen is that during the peak demand season of April to July in north and central India, there was not too much of heat, and it was clouded at this point in time with heavy rains at this point in time as well. However, now ICRA believes that there's a partial recovery that's expected in second half of FY26, especially from the southern and the western regions. That's driven by forecasts of a warmer summer in 2026 going forward from here. Moreover, ICRA also projects the reduction in GST as well to more than offset the price rise related to the implementation of the new star label guidelines in January of 2026, and therefore boosting the pre-buying in the next quarter as well. Chakri, coming to you, consumer durables, specifically in the AC segment, we've not seen very enthusiastic performance in the likes of Voltas or a Blue Star or a Havells for that matter this entire year. The reasons are pretty clear in ICRA's report. But given that we have a new booster shot by way of GST reduction, a lot of people who may have planned to buy their next ACs in the next summer may be wanting to take the benefit right in this festive season just to look at the 30-40% decline that's being seen, in this festive season. E-marketplaces are flooded, and there are reports that, the demand is difficult to be met because there's so much demand, and most of the orders are also getting cancelled there. So that's also a demand, report that's come in. How would you look at consumer durables?
Consumer durables are well positioned with the GST cut. The prices of ACs and other durables have come down and will come down. And so against that, the dealers will probably have some amount of inventory mismatch, but that's okay. In the longer run, over the next 12 months, because weather is a very cyclical thing, you can't really predict it that well. But the outlook for the sector, whether it's Voltas, Blue Star, Havells, and all these consumer durable companies look very good. And I think the volumes pickup will more than offset the other short-term concerns. Longer term, clearly worth buying into.
Okay, fair point. So that's as far as the consumer durable sector is concerned. Any other segment within the entire consumption-oriented demand that you are bullish on at this point in time, Chakri?
If we are bullish on automobiles, then we need to like tires. And so companies like Seat, Apollo Tires, all these companies also benefit from a GST cut. They benefit from the higher demand for vehicles, and they also benefit from lower oil prices because that is one of the major inputs, various kinds of raw materials which are oil-based have come down, and that will actually benefit the tire companies.
Okay, fair point. In fact, we'll also just shift focus to especially the Geo BlackRock mutual fund, which has recently launched its FlexiCap fund. This is also a show where we help you understand more about the mutual fund space as well. So, in an exclusive conversation with Ridhima Bhatnagar, Sid Swaminathan, the MD and the CEO, has actually expressed optimism about Indian stock markets. He's actually said that he expects the markets to grow to 2 to 3 times over the next 5 to 7 years. So, there is not too much of a worry in the current uncertain times as well. Let's listen in to that expert and we'll come back to our conversation with Chakri.
How do you plan to disrupt this already crowded mutual fund space, or it's according to it's a huge ocean where everyone can have a space?
Yeah, I think if you take a step back, the reason for us starting this joint venture here is the immense potential that we see in the markets here. And there's a lot of tailwinds, as I call it, if you look at it from a macro perspective about overall GDP, how the economy is growing, productivity, demographics. Those are all really, really strong for India, and there's global consensus on that. And then if you go one level deeper and you look at some of the micro factors around individual participation in markets, that's really increasing, and it's still at a small base. So more and more people are starting to move from, let's say, a saver's mindset to an investor's mindset, which is fantastic. So that potential, so the combination of these two is huge, which really gives me this confidence that this market is going to go 2 to 3x in the next 5 to 7 years. So there is so much space for all of the incumbents to grow.
And when we're talking about the various asset classes where you can explore your investments, one cannot rule out talking about gold as an asset class, as it has once again eclipsed Indian equities, marking the 4th year of its superior Diwali to Diwali returns. Over the last 8 years, the yellow metal has actually outperformed equities in at least 7, cementing its reputation as a go-to safe haven as well. Most of the gold analysts still say that investors should not be surprised if the trend extends through the next festive cycle as well. Remember, the MCX gold has already rallied 40% since last Diwali, compared to a modest 5% increase in Nifty 50. In 2024 alone, Diwali to Diwali returns showed a 32% surge in gold against a 24% gain in the benchmark Nifty index, while in 2023, gold had jumped 21% vis-a-vis Nifty's 10% surge. Let's go back to Chakri to understand how should an average investor really look at the opportunities in front of them. Chakri, we cannot rule out with the kind of unstoppable rally gold and silver have displayed year on year, and we are now given to understand that gold on a Diwali to Diwali space has actually outperformed in 7 of the 8 instances in the last 8 years. How are you looking at this unsatiable appetite for gold and silver even at record high levels, and what does it mean for an average investor who has been looking at an asset allocation where there is only a 10 to 15% allocation to gold and silver, whereas there is a large part that goes into equities, and what should one do now?
Gold as an asset class has done phenomenally well, and now to join the party, it's no longer just individuals buying gold, but countries are buying gold too. US itself has bought lots of gold lately, and so the demand characteristics, given the uncertainty in the political uncertainty, has increased the demand for gold. As an asset class, it's a very important asset class, and given it's a limited commodity, I think still it's a worth having exposure to gold as a part of your overall portfolio.
Absolutely. It's 3:29, so let's quickly shift focus to the market closing, and after a minute we'll be back with Chakri talking about some of the insights that he has to share on the viewers' queries as well in our viewers' queries segment too. So let's look at how the markets are shutting shop. Remember, it's the 4th consecutive day of losses for the markets, now 0.4% of a decline as what we are seeing on the Nifty at this point in time. Of course, this is led by a large broad-based sell-off that we are seeing into the markets, led by the real estate sector that's down by about 2.5% in trade, the top loser in trade today. We're also looking at the Nifty next 50 names dragging by 1.5%, looking at mid caps and small caps also down in trade, especially the mid caps that have lost about 1% in trade as well. Let's also pull up some of the other sectors like private banks that are down by almost 0.8%, IT that's down by 0.7% as well. So those are the graphics that are playing on your screens. Keep an eye out on how some of these sectors in the stock markets are performing. Barring FMCG, rest all of these sectors are dragging in trade today. 0.2% of a move on the higher side on the FMCG stocks. What are the top movers on the Nifty today? Well, you have names within the power space like Power Grid, like NTPC. Those are the top movers. You also see FMCG names like HUL, for instance, and Nestle that's also pulling up. Then from the auto pack, you continue to see that Maruti Suzuki is driving still on the positive end. 16,254 continuing to end at record levels, record closing levels, that is, as far as some of these names are concerned. But on the downside, again, you have a contrasting trend. Tata Motors is the top loser today, 2.6% of a decline there. BEL from the defense space, Geo Finance, Adani Enterprises seeing some profit taking, 2% lower in trade as well. So that's how the markets have shut shop today, 25,056 at this point in time. Let's shift our focus to the viewers' questions now. Chakri, we have our first question from our viewer Pranav Shah for you. He's from Vadodara and he says, I'm heavily invested in IT stocks. I do have some profits of about 25% on most of my holdings, but I don't know whether I should sell off my position in the wake of the H1B crisis at this point in time. Chakri, how would you advise this? You did say that IT is one space that you'd like to stay away from. Those who are still holding on to profits, maybe even long-time investors, should they pull out?
If you're a long-term investor, then the H1B crisis and the other crisis will come to pass, and the longer-term trend for the good remains intact for the sector. However, there is nothing like taking some money off the table. So if they have made some good profits, it's advisable to book some profits and diversify their risk.
Book some profits and diversify your portfolio. Satvik Sharma from Delhi writes in and he says, I have never invested in equities but have made a big profit in gold in the last 2 years. So should I switch from gold to equities now? And is this a better time to look at stock markets? Good question there. So, still people believe that, if they have seen the best of the rally in gold, should they actually now look at switching at this point in time? Or do you think gold will have much more to go?
Excellent question. It's not about one versus the other. It's investing in both. So it is advisable to have some exposure to gold, and plus, if that's the only exposure, to shift some of it to equities, but clearly to have both.
Okay, have both in your portfolios. That's a clear view that's coming in. But yes, if you have major chunk only in gold, you can definitely diversify and have a proper asset allocation and invest in equities as well. Last question that we have is Parth Jain from Mumbai, who says, where should I invest to benefit from the festive demand? Are QSR stocks the right choice, or should I look at food delivery space?
Food delivery space is going through quite a lot of change. Because on one hand, the higher volumes of GST will benefit, but higher platform fees will kind of hurt them. So the best would be to invest in a consumer discretionary index. That is the safest. It gives you exposure to all the consumer discretionary companies.
Fair point. Thank you so much, Chakri. Always a pleasure to speak to you. So thank you so much for your insights on the markets, and thank you for solving the queries of our viewers as well. This definitely will give them a greater clarity of how to approach their investment portfolios as well. Thank you so much. Appreciate it.
Thank you so much.
All right, viewers, that's a wrap on the Business Today show. And in case you too have questions about investments in mutual funds, in SIPs, or maybe even stock markets or gold-related queries, then please do send them to us on the number that's flashing on your screens. And don't forget to catch Abba Bakaya for all the morning market action at 9 a.m. on India Today. Till that time, signing off, Sakshi Batra here.